billion. So that's less than half of what he's seeking to cut. So it would be nearly impossible to get $2 trillion in cuts without going after entitlements such as Medicare, Social Security. You know, in Washington, everybody likes to talk about reining in government expenses and pork and fat in the government budget. But what is one lawmaker's, pork is another's pet project. The program that brings home dollars to their state, to their district, and includes jobs. So it's going to be very, very difficult, if not impossible, to get to this level of cut. Remember, Congress does have the power of the purse, and they will have the ultimate say. Of course, Trump has been discussing some unorthodox ways of getting around that. But even in doing that, this goal is quite potentially unachievable.
Of course, when we're talking about Musk and his own companies, they include Tesla as well as SpaceX, of course, X, formerly known as Twitter. And when it comes to Tesla and SpaceX, they have enjoyed billions of dollars in federal benefits through the years. How exactly, we only have about a minute or so left, but how exactly does the conflict of interest not really come up in this type of situation when electric vehicle tax credits and infrastructure investments are tied to his companies?
Sure. It was interesting today. Musk reiterated that he would be okay with getting rid of the EV tax credit and all other tax credits of that ilk, pointing to the climate law that Biden pushed through. Musk enjoys certainly that credit, but he also has a huge market advantage when it comes to EVs. And many of the people who buy Teslas are not buying it necessarily for the tax credit in the way some of the lower cost EVs that are on the market, where the buyers are really pulling for that. So I think he would continue to enjoy the advantage here, even if the EV tax credit went away.
Megan Scully, Bloomberg News Capital Influence team leader, joining us from Washington, D.C. Megan Scully, do appreciate your time this afternoon. That is going to do it for Bloomberg Business Week on Bloomberg Television this afternoon. If you are continuing on Bloomberg TV, the close is up next. Bloomberg Business Week continues on Bloomberg Radio, YouTube, and Bloomberg Originals. Got a great program coming up, talking to George Ferguson about American Airlines in just a minute. And then the CEO of the publicly traded Lifeway Foods joining us as well.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Christopher Cruz. A major earthquake has hit Northern California, prompting a tsunami warning. However, we just received word that warning has just been canceled. This woman, Julie, says she felt the 7.0 quake, which struck off the coast of Ferndale.
It was pretty obviously an earthquake. My living room floor shook and my front windows shook. So I knew it was an earthquake. It was a fast one, though.
There have been 10 aftershocks so far. Ominous words have been found on bullets used to shoot and kill the CEO of United Healthcare in New York yesterday. CBS's Jared Hill has that.
Found at the scene, words written on the shell casings: deny, defend, and depose, similar to the 3 Ds of insurance, a phrase used by opponents of the industry.
A federal judge in Texas has rejected the latest plea deal, that is, between Boeing and federal prosecutors over 2 737 MAX jet crashes.
U.S. District Judge Reed O'Connor siding with the family members of those killed in the 2 Boeing 737 MAX crashes. They urged the judge to reject the agreement on the grounds that it failed to adequately hold Boeing accountable using an independent monitor. The families want the U.S. Department of Justice to prosecute Boeing. Mark Pegram lost his son Sam on the Ethiopian Airlines flight.
Sham of a deal that does not give accountability for 346 deaths.
Chris Fox for CBS News, Austin.
Elon Musk and Vivek Ramaswamy are on Capitol Hill this afternoon to brief members of Congress on their plans for the so-called Department of Government Efficiency, or DOGE. CBS's Scott McFarlane tried to get details from Musk.
Hey, Mr. Musk. Sorry to impose. Sorry, guys. Any idea whether you want to cut Social Security, Medicare maybe too?
NASA's two stuck astronauts have now been in space for 6 months. Butch Wilmore and Sonny Williams have 2 more months to go before their mission on the International Space Station comes to a close. They rocketed into orbit on June 5th as the first to ride Boeing's Starliner capsule. It was supposed to be just a week-long test flight, but thruster failures and helium leaks in the capsule kept the astronauts holed up at the space station. NASA decided to bring the capsule back empty in September and will put Williams and Wilmore on the SpaceX flight in February. And the health minister in the Central African nation of Congo says the government is on alert over a mystery flu-like disease. In recent weeks, it has killed 17 people. Recapping the top story of the hour, a 7.0 magnitude earthquake has hit off the coast of Northern California. About an hour before the end of trading on Wall Street, the Dow is off 180 points. This is CBS News.
.com.
There's a new leader in vehicle reliability ratings.
Subaru pushing Toyota and Lexus out of the top spot in Consumer Reports reliability rankings. The study's author, Jake Fisher, saying Subaru doesn't add new technology until it's ready for prime time.
Subaru, they incrementally make them better. They don't start new.
Asian brands dominated the study. Domestic brands didn't do so well, with EV startup Rivian coming in last. Jeff Gilbert, CBS News, Detroit.
Taylor Swift had the top-selling book in the U.S. last week, as well as the biggest publishing launch of 2024. Her Eras Tour book sold 814,000 copies over the Thanksgiving holiday weekend, according to figures compiled from about 85% of the print market. Swift sold the book exclusively through Target. As popular as the book is, some fans have complained that it has a lot of typos and other errors. Christopher Cruz, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek. That is Jess Menton in for Carol Masser this afternoon. Jess, Bloomberg Deputy Team Leader and Senior Reporter for U.S. Equities, right here in the Bloomberg Business Week studio. Thursday, December 5th, our show continues on Bloomberg Radio, YouTube, and Bloomberg Originals. Jess, struggling for traction when it comes to U.S. equities here today.
That's right. So you're seeing just the S&P 500 marginally lower here, but of course, if it does end a hair lower today, that would snap 4 consecutive days of gains. But also, 56 records so far this year. If you compare that to history, it's among some of the top years of this century. And one of the best years was actually 1995. There was more than 70 records there. So getting kind of close, but a little bit off of that, but still one of the best years that we've seen for records so far.
Hey, we got a great great program coming up this afternoon. We're going to bring you an update from the coast of California on that magnitude 7.0 earthquake that occurred near the coast of Northern California. There is no longer a tsunami threat, but we got our correspondent standing by out there. Mark Chediak is going to be joining us in just a few minutes. Also, an update from the CEO of Lifeway Foods on the company's future after rejecting Danone's takeover offer.
That's right. And of course, we can't forget Drive to the Close, since we have just under an hour before the closing bell. So we're going to have Eric Clark, portfolio manager at Rational Dynamic Brands Fund, who's going to be joining us to talk all things markets and what to expect in 2025, Tim.
All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Denise Pellegrini in for Charlie Pellet. Hey, Denise.
Hey there. Yeah, investors a little bit rattled maybe by what happened in California with that earthquake. Right now, we do have the Dow down about 0.4%, down by 186. The S&P 500, it's down just fractionally now, down 3. The NASDAQ, though, it has just turned higher a little bit. Investors also maybe a little bit concerned by prospects. The Fed might not be as rate cut happy as they hoped. And the yield on the 10-year right now, 4.17%. Spot gold right now down 0.7%, 26.31 an ounce. Brent crude, it is up fractionally, up about 0.1% at 72.39 a barrel. Bitcoin, meantime, below that 100,000 mark, it is now 99,289, was well over 100,000 earlier today. Kathy Jones, chief fixed income strategist over at Charles Schwab, citing some inflationary pressures as one of the things to worry about lurking in the wings from President-elect Donald Trump's tariff and immigration plans.
If you get counter tariffs and retaliation, then we could get into a kind of ugly trade war, which wouldn't be good. And, immigration policy, if we really reduce the size of the workforce substantially through deportations or just limiting immigration, then we're looking at probably higher salaries. Shortages in some industries could be particularly acute, like construction, where housing is already very expensive.
And Jones there on Bloomberg Television. Boeing shares, they are down almost 1% after, as we've been talking about, a federal judge rejected Boeing's plea deal with U.S. prosecutors over the 737 MAX jet crashes. And guys, Sam's Club, that's Walmart's warehouse club, it's getting into the holiday spirit by giving out holidogs. Holiday-themed hot dogs, just what you always wanted. One is topped with mashed potatoes and a Christmas cookie. Another has pumpkin pie and some crushed candy canes on it. And the third has turkey and prime rib slices all over that hot dog. So
I don't know about that.
Go out and get it. For on-demand news and hot dogs 24 hours a day, subscribe to Bloomberg News Now whenever you get your podcasts. I'm Denise Pellegrini. That's your Bloomberg Business Flash, guys.
Thanks, Denise. Do appreciate it. Well, out to California, where the magnitude 7.0 earthquake occurred off the coast of the northern part of the state. It triggered a tsunami warning that was later lifted. That quake felt from San Jose to Grants Pass, Oregon, and as far inland as Sacramento, with a magnitude 4.2 aftershock detected later. That earthquake occurring along an active plate boundary, but experts say it was not predicted by recent smaller earthquakes in the area. We got with us Bloomberg News Deputy Team Leader for Power and Natural Disasters, Mark Chediak, who joins us from the San Francisco Bay Area. Mark, good to have you with us this afternoon. Just give us your experience a little over an hour ago, if you felt this.
Actually, I did not feel the shaking. However, I did get an alert on my phone that an earthquake was imminent, and then I got a subsequent alert that lots of us around the Bay Area got about a tsunami warning, basically telling everybody to seek higher ground. I think there were reports of limited shaking around the San Francisco Bay Area, and the tsunami warning obviously forced some evacuations, including our offices along the pier.
Anecdotally, what are you hearing from either family, friends, or even colleagues as far as their experiences so far?
Well, we're hearing things like daycare centers that are near the coastline closing early, the San Francisco Zoo shut and evacuated, the Bay Area Rapid Transit train service, shut service between San Francisco and the East Bay. We are getting some reports from closer to the earthquake. One of our reporters spoke to the city manager of Eureka, and they are getting some limited reports of damage, but it's still early, and a lot of times when these big events occur, it takes a little while to sort of figure out kind of what kind of damage has happened.
Yeah, so let's talk about that. It's still early. I know the Bloomberg News team is out there; they're gathering data. But are we hearing any reports of significant damages here at any point in the area? And again, this occurred off the coast, so the epicenter was by no means on land.
That's right. The epicenter was about 62 miles off the coastline. We are not at this point getting any reports of severe damage. That doesn't necessarily mean that hasn't occurred, but at this point we're not getting those reports. The earthquake did strike off the coastline of a fairly sort of remote, not a densely populated part of the state. So it's also possible that we're just not getting a lot of reports back because it's just not an area where we have a lot of resources. But we'll see as the day continues. So far, so good on that account, though.
It's interesting, too, because a 7.0 quake is actually larger than the one that shook San Francisco on October 17th, 1989, and that is when a magnitude 6.9 earthquake knocked out all power and killed 63 people throughout the region. But especially since this was off the coast, maybe a little bit of different with the tectonic plates and how they were moving for this situation and why it would not potentially be as devastating as what it would have been in history. So what's next in these types of situations, since you're familiar being out there, and what typically happens here?
Well, typically we start getting reports from local officials about the kind of damage that's occurred. It may take a few hours before those reports start coming in. The other thing is people who are in harm's way are trying to make sure their friends and family are safe. And it's a little bit of a chaotic period initially, but after that period passes, we start to get a better sense of what's the magnitude of all of this, so to speak. The good news is they did lift the tsunami warning because that was something that we were quite concerned about here in the San Francisco Bay Area. We have a lot of low-lying areas that are vulnerable to a tsunami. So far so good. We will see as reports come in throughout the day, but hopefully we kind of dodged a bullet here.
Yeah, we're certainly grateful that you're okay and that the folks out there are okay, Mark, and definitely appreciate you joining us. That's Bloomberg News Deputy Team Leader for Power and Natural Disasters, Mark Chediak, joining us from the San Francisco Bay Area.
Of course, switching gears here, Tim, looking over at U.S. airline carriers because they're actually forecasting a stronger outlook for the critical holiday travel season, including American Airlines, who just today raised its profit expectation. Joining us now to discuss more, George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence, joining us from Washington, D.C. George, I want you to walk us through this, because looking at American Airlines stock, up about 19% on pace for its best day since June 2020. What's going on here?
Yeah, so I think we've seen a number of the airlines come in and talk about slightly higher revenue. It sounds like fares are firming up here in the holiday season, which is good stuff. But American set itself apart this morning because it disclosed it had signed a new credit card agreement with, I think it was Citibank. And they basically said, look, it's, this agreement just generated like $5.6 billion a year through September of this year, and that they expect it to grow 10% per year, and that once it reaches 10 billion, it would contribute $1.5 billion to pre-tax income, which is pretty strong. Margin sort of gains. And so I think that's really what you're seeing, the outsized, performance of American here today.
Well, what's the context for an information release such as this? I mean, the company isn't set to report earnings for the current quarter until January 24th, 2025. There's no investor day that I know of today. What was the context for this?
Yeah, like I said, a number of the airlines have been out recently in the marketplace talking about the slightly better fares. So my sense is American sort of piggybacked on that. And you can imagine that when they negotiate this and they finish the negotiations, there's always a risk that the information could leak into the marketplace anyways. And so they probably thought, look, we're going to go to the market and talk about slightly firmer fares. Let's go disclose this as well. That sort of, eliminates any problem of it being leaked to a selective few. I think that's probably what's behind it.
And especially because you were talking about some of those other airlines like Southwest, JetBlue, also boosting those improved guidance this week as well. And so for people, since we're in the thrust of the holidays here coming up, just how expensive do you think some of these airfares may be? And can consumers still find bargains this holiday season if they put it off?
Yeah, so I think the way you're going to be able to find a bargain is not fly at those, the big crunch moments, right? If you're flying the week before Christmas and, right after New Year, you're probably going to pay full price. You got to sort of push things out and try to find the days where the airlines aren't as busy. And look, we had seen fares have been dipping through 3Q. What we've seen recently is you've got what Spirit Airlines declared bankruptcy. They're going to cut capacity by about 20%, or at least get rid of 20% of their airplanes. We've got Southwest that's trimming back some of their flying, JetBlue cutting it. So we're starting to see, the improvements you need to get fares to rise a bit. And I think that's what we're seeing in these reports, is that some of that work is starting to buoy fares a bit, but they're not as bad as they had been. But we may see sort of an arrest in the slide here. And again, in holiday season, if you fly 4 times, you're going to get tagged.
Yeah, I already know that. Been tagged already. I think I even paid that one off already, George. It's not pretty. Definitely appreciate you joining us. George Ferguson from our Bloomberg Intelligence team. He's a senior aerospace, defense, and airlines analyst. American Airlines stock having its best day in years. Look at that, Jess.
19%,
Wow.
best day since June 2020.
All right, that's a list for my gainers. Up next, we're talking kefir.
And we check the markets for you all day long here at Bloomberg. It is 3:21 on Wall Street. Stocks, they are lower right now. Max Kettner, Chief Multi-Asset Strategist over at HSBC, though, is among the bulls for the first half of this coming year. He is calling for a powerful upside move for U.S. stocks, with consumers going strong.
I really can see that consensus, which is still calling for around about a deceleration of US GDP growth to around potential 1.7, 1.8 in the first half. I think that's way too bearish, and that means earnings expectations also too bearish. That really is, it's such an extremely supportive Goldilocks backdrop.
And Kettner there on Bloomberg Television. We're not seeing that kind of rally today, though. Right now, the Dow down 204 points, S&P 500 down 6, NASDAQ down 14. The yield on the 10-year right now, 4.17%. Spot gold right now, $26.29 an ounce. And West Texas crude, it is down, but just fractionally, $72.28 a barrel right now. Bitcoin still slipping, down at 98,242 now. We were trading well over 100,000 earlier. Shares of discount retailer Five Below are soaring. That's after boosting their full-year outlook and naming former Forever 21 and PaperSource CEO Winnie Park as their new chief executive. And just in time for the holidays, the new seasonal M&M's flavor, toasty holiday peanut, like a peanut M&M, but with cinnamon, vanilla, spice, sugar, and caramel mixed into the chocolate. Just what our dentists are hoping to hear for as we go into the holiday season. For on-demand news 24 hours a day, subscribe to Bloomberg News Now whenever you get your podcast. I'm Denise Pellegrini, and that's your Bloomberg Business Flash.
Hey, Denise, thanks so much for that update. Really do appreciate it. Bloomberg Business Week is brought to you by River Spring Living. If you're looking for a vibrant community for your mom or dad, River Springs Senior Housing has options that might be the perfect fit. Schedule a tour and see what makes life at River Springs special. Visit riverspringliving.org.
I want to give you another update here with Tim on this strong Northern California quake that triggered a brief tsunami warning. So a magnitude 7.0 earthquake occurred off the coast of Northern California. Of course, it did trigger that brief tsunami warning across the U.S. West Coast. The earthquake was the strongest, actually, when you're thinking about the mainland U.S. since 2019. It was felt from San Jose and Grand Pass, Oregon, and as far inland as Sacramento. We're keeping our eyes and ears obviously updated to what is happening here, but the Thursday's quake was detected 62 miles west-southwest of the city of Ferndale at 10:44 a.m. local time, according to the U.S. Geological Survey, Tim.
Well, you can find our next guest products in the dairy section of your local supermarket. Lifeway, known for its kefir. It's that yogurt-like drink. You can also find it in my cousin's fridge, I found out over the weekend. I opened the fridge and there was some Lifeway in there. It's a publicly traded company, about $360 million market cap. We got back with us Julie Smolansky. She's second generation of her family to run the company after her father started it and took it public on the NASDAQ. There's a pretty cool story behind that. Julie Smolansky is chairman, president, and CEO over at Lifeway, joining us from Los Angeles. Julie, great to have you back with us.
Actually in Miami right now. I'm
Miami.
at Art Basel.
Oh, look at that. Okay. Well, trade one warm climate for another warm climate.
Right, warmer than here, for sure.
Yeah, love it. Hey, so since we last spoke in October, Lifeway rejected that unsolicited takeover offer by Danone North America, $27 per share, because according to you guys, it, quote, substantially undervalues the company, though you also said that the board is not opposed to the sale of the company at any price. What's the price?
Well, that's for others to decide. But what I can tell you is that, you know, I'm not surprised that there is this interest and a lot of eyes on us. We have achieved 20 quarters of year-over-year growth. The last 5 quarters were historic, record-breaking quarters. Our gross profit has gone up almost 100% in the last 5 years. Our shareholder return, we've delivered a 1,200% return in the last 5 years. So there is a lot going on at Lifeway, and we're really excited about all the opportunities that are available. So, you know, we still have a long runway to go, and we have a playbook on how to do it with an incredible management team, and really on trend products that are really hitting the tipping point. Like, we haven't even scratched the surface of all the opportunities around gut health, microbiome, friendly live bacteria that is beneficial to the body, that science is now finally just catching up to what my ancestors have been saying for 2,000 years, which is that kefir and Lifeway kefir is beneficial to the body. And so we're really excited about all of that.
Julie, do you want to actually sell this company? Because you grew up with this company. You took over at the age of 27. Yeah. It's a really interesting story. It's also a tragic story about why you ended up taking it over. But I imagine there's a lot of emotions with this. I mean, do you want to sell it?
I mean, there's a board, there's an advisor. Evercore has been brought in to be the financial advisor, investment banker. We have a very acclaimed legal team. So, what I want is not necessarily really relevant. But what I can tell you is that Lifeway and kefir is in my DNA. And like you said, my father started the company. It originated from the Caucasus Mountains, where my family is from, and there is certainly a long legacy and authenticity that is priceless, and that will never disappear. Our legacy, our history, what we've brought to the food industry, to the dairy case. My father brought kefir to America and created the category, commercialized it. So, what I would say is that there's probably no one else that knows kefir better than I do. I was 11 years old when my dad gave me the very, very first batch of kefir that he made in our basement outside of Chicago in Skokie, Illinois. And I was 11 years old when I went to the first trade show and grew up on a trade show floor. 11 years old when I, took part in my very first in-store demo, teaching Americans what kefir is all about. So, that's what I can tell you, is that it's in my DNA. So I'm very passionate about it, and that will never change.
Well, I wanted to follow up on that, because why do you think it's not relevant if you're chairman and CEO of the company?
Well, there's a board, and there's, a lot of other factors that go into play. So that, that's really, there's corporate governance, and we're a publicly traded company, and the board is going to do what's in the best interest of all shareholders and all stakeholders. So that's what's really important to us, to make sure that we follow a great process and bring the best value to shareholders. But we're committed to bringing shareholders the best value for their investment, and that's what we'll keep doing.
What message do you have for shareholders right now who want to make sure you're not distracted with these takeover offers and the work that goes into these, versus making sure you're staying focused on delivering products and also working on that pipeline of products?
For sure. Well, we just announced a series of new innovations that we've been working on. We just launched 10 new exciting lactose-free kefir flavors and really exciting trend-setting flavors like pink passion fruit, pink dragon fruit that was inspired by the Starbucks success of their pink drink, pistachio rose vanilla inspired by the viral hit of Dubai chocolate bars. So a whole bunch of really hot flavors, taro ube. So those are hitting the streets. It's really exciting to see them out in the wild. We just announced another new innovation, a collagen kefir smoothie. There is a huge demand for skin healthy foods, foods that make us glow from the inside out and bring beauty to everyone inside out. We really believe that beauty comes from within, and it starts with the gut. And there's incredible science and research that shows that the microbiome is just starting to become, all the good things about it is just starting to become known to lay people. And so we're focused on sharing that message with as many people as possible. I'm right now at Art Basel, doing the art of business at a founder-made summit, talking with other entrepreneurs about all the great work that we're doing, incorporating AI into our business, how it expedites our product launches, et cetera. So, I'm definitely very focused on all the great things that we have we are excited to announce our children's product, ProBugs, which is the first kefir in a pouch, first product in a pouch. We really disrupted the baby food space by bringing pouches to the market and disrupting that whole space. But our ProBugs are, for the first time, we're scaling into mass market. They've always been available at Whole Foods nationwide exclusively, but now we're taking them mass market based on some research that shows that this is a continuing demand for parents and kids, and we're making sure that all of our consumers from cradle to grave are being served in one way or another. We'll be announcing new expansion of our farmer's cheese, which has become really a huge success. It's been a legacy product for us for the last 38 years, but farmer's cheese is really taking off because of the viral nature of cottage cheese, because of TikTok and social media. Cottage cheese really took off last year, and our farmer's cheese is already basically like a better version of blended cottage cheese. So we have like a recipe hack there. So, farmer's cheese is going into mass market for the first time into 1,400 stores in January. So we have a lot of great things that we've been working on and are hitting the streets, and that's what we're dedicated and focused to. And the board will handle the other stuff in the boardroom.
And when you're talking about sort of the farmer's cheese, cottage cheese, and things like that, who do you consider to be your prime competitors?
Well, it's hard to say because, Lifeway is really the 95% category leader in kefir, for example. So we're the global category leader. We have 95% market share in the United States. We're the #1 category leader in Mexico, where we launch and export to. We're in South Africa now. We're throughout the Caribbean. We just announced a new distribution deal to UAE and Dubai. That'll be shipping in the next couple of days or weeks. And so it's hard to say who's our competitor. We're the #1 in kefir. We're the #1 in farmer's cheese. I would say, the next thing would be other kinds of categories that compete with us, but not specifically anything within our category. We're the #1 in both of those with no competition behind us.
Julie, we're going to have to leave it there, but it's always great when you join us, whether you're in Miami for Art Basel or you're in LA. Julie Smolansky, Chairman, President, and CEO over at Lifeway, joining us this afternoon. Jess, a quick update on that story we're following out of Northern California. Magnitude 7.0 earthquake, 7.0 on the Richter scale, off the coast of Northern California triggered a brief tsunami warning across a swath of the U.S. West Coast. The tsunami threat was declared over less than an hour later, even as the area experienced multiple aftershocks.
It was the strongest earthquake to strike, when you're thinking about the U.S. kind of mainland here, since 2019, when a magnitude 7.1 aftershock was detected in Eastern California during a larger seismic outbreak. When you're looking at this, so Thursday's quake was detected 62 miles west-southwest of city of Ferndale at 10:44 a.m. local time, according to the U.S. Geological Survey, Tim.
That tsunami warning was briefly in effect for Eureka, more than 250 miles north of San Francisco, as well as from the central Oregon coast to just north of Santa Cruz, California. Coming up next, we're talking with Eric Clark. He's portfolio manager at Rational Dynamic Brands Fund. It is our drive to the close on this Thursday afternoon. The S&P 500 down 0.1%. The NASDAQ down 0.1% as well. This is Business Week.
And we check the markets for you all day long here at Bloomberg. It is 3:40 on Wall Street. Stocks are lower, Bitcoin higher, but way off session highs. And for more, let's go to the First Word breaking news desk for today's afternoon call. Here he is, Mr. Bill Maloney.
And good afternoon, Denise. That's right. U.S. stocks trading in the red right now, with the Dow currently down 200 points. S&Ps are down 5, while NASDAQ is lower by 21. The U.S. 10-year yield at 4.17%. Gold is down 21. Oil is in the red. And you mentioned Bitcoin. It was trading just shy of 104,000, but is now back to 98,000. Among the main 11 S&P sectors, leaders were consumer, discretionary, and tech. Materials were under pressure, and leaders to the upside in the Dow, Merck and 3M, while UNH fell 6% and led to the downside. In others, Tractor Supply's board approved a 5-for-1 stock split, and Uber plunged 10% on a report Google's Waymo plans to expand in Miami. Wrapping things up, some of the names putting after the bell tonight include DocuSign, Lululemon, HPE, and Ulta Beauty. Live from the First Breaking News Desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg terminal, type SQUA for SQUAWK on your Bloomberg terminal. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Denise Pellegrini, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
With less than 20 minutes to go before the closing bell, the S&P 500 is just marginally lower, down about 0.1%, Tim, but still on track to snap 4 consecutive sessions of gains. Of course, Tim was pointing out earlier how the S&P 500 has hit 56 records so far this year through yesterday. So one of the best years we've seen so far this century. Now it's time for Drive to the Close with...
This century. I mean, we're like a quarter of the way through the century.
I mean, that's right. We're going into 2025. Yeah, if you put it into historical context, 2021 saw, I think it was around 70 all-time high. So that was that year where we saw a lot of the meme craze and Doge craze as well. And markets had peaked out later that year in the NASDAQ 100. But one of the best years, 1995, also had more than 70 records. But still, nonetheless, 56 is good here. But we want to bring in Eric Clark, portfolio manager at Rational Dynamic Brands Funds from San Diego, who is going to break down the outlook for markets in 2025. It's great having you join with us, Eric. And I want you to discuss, as we're kind of the calendar flipping going into 2025, I mean, we still have a little under a month to go here. So what is your kind of take as far as positioning going into year end? And what does the positioning say as far as how investors are moving things around and shifting things in their portfolios going into 2025?
Yeah, hi. Happy holidays almost. You know, it feels a little like November of 2021 right now with the speculation, you know, and that's what happens when people are nervous and there's a lot of uncertainty with the election and the results. And, you know, the Fed's been gating off the economy for 2.5 years. So when that all changes, you know, some you know, animal spirits get unleashed. And I think that's where we are right now. So that always makes me a little bit nervous short term. But I think, you know, heading into 2025, we should have a good, stable economy with an administration that's clearly more pro-business and less regulation, hopefully maybe even working on the government and their operating efficiency. So, you know, we see lots of positive things. And, you know, the consumer is still strong in spending, albeit not broadly, but that isn't a new phenomenon. The consumer has been very value-oriented and trade-down-oriented for the last, you know, 2 or 3 years because of inflation. So we don't really see that changing too much. We just worry a little bit that the speculative part of the market is getting a little too excited for people. And so, you know, we don't tend to play in that world anyway.
Is it like Bitcoin, speculative?
I would say Bitcoin. I would say lower quality stocks, smaller cap stocks without profits. You know, those things have lagged for the last year. And so they're playing a little bit of catch up, and some of the big cap high quality names are slowing down a little bit, which is fine. They were, you know, doing all the heavy lifting for most of the year. So,
well, okay, so let's talk a little bit about what you're going to do and how you might make some changes in that fund. HSUTX, the Rational Dynamic Brands Fund, year to date up more than 31%. It puts it in the 87th percentile of its peers. So certainly some significant outperformance there. Over the last month, up close to 10%. Amazon, Apollo, KKR, LVMH, Netflix, Chipotle, among the top holdings in there. How does that change? How are you changing the portfolio, or are you sticking to what you have in there right now?
Well, we're sticking to some of the things, like, Amazon's been the biggest holding for a couple of years now, and we got a chance to really make it much bigger in 22 when the stock was down 60% or so, which we thought was really silly. So we got a chance to buy a bunch of names when the market just didn't care about fundamentals in 2022. What I would say is we're introducing a little bit of defensiveness to the portfolio through things like, Clorox. We already have Walmart, which tends to be a pretty good defensive, even though they're playing offense pretty good these days too in retail. We've added, NextEra Energy, which is a utility in renewables. And then we have some contrarian ideas for 2025 we've added Disney, we've added Nike back. We haven't had that one in a while. We've added Starbucks back. We haven't had that one in a while. But we still love, the private equity guys, even though, maybe those stocks might be a little bit ahead of fundamentals. Long term, they're still going to all grow their assets, by double over the next 5 years. So the stock prices certainly will catch up to the fundamentals soon enough. So generally speaking, keeping with the same themes of consumer spending and the big trends that are happening, but always looking for some catch-up opportunities that haven't moved, that aren't so expensive, that people don't really love, or that may be, real turnaround stories. And we're seeing more and more in the retail sector for sure. So
you like Apple, Netflix, Amazon. What about when you come to chip stocks like NVIDIA and maybe some of the other smaller ones?
We obviously sold NVIDIA way too early. We had some good gains on it. But to me, if I were going to play in the semiconductor world, Taiwan Semi still looks more interesting to us, much more reasonably valued, has to be a part of every conversation within semiconductors and manufacturing. But, as a consumer dedicated investor, the technology that we own tends to be more consumer tech rather than semiconductors in general. So that tends not to be a place that we play. We love Salesforce. Clearly, they are going to enable lots of consumer companies to, implement AI initiatives, streamline operations, get some operational efficiencies. That's going to be a major theme across corporate America for the next 3 years. And, my view is that once you implement those things, your stock might not look as expensive as it does if you can reset margins higher and profits higher because you're just doing things much better and delighting customers and allowed to raise your prices like Meta did, with their ads. So AI is definitely a very important thing. It's not just semiconductors. It's going to ripple through the entire, all of corporate America.
In the last 30 seconds that we have with you, what are you staying away from? Apart from the speculative stuff. Sorry.
Sure. I mean, I think it's if you are high valuations, super high expectations, and going into the year where your business is probably about as good as it gets, then those are areas that I would like to stay away from, because I'm much more focused on where are estimate revisions, where have they bottomed, and where are the beats probably more likely, rather than in the most heated part of the market that everybody wants. I tend to be I use the phrase looking for diamonds in a dumpster, and that's what we're doing in retail right now.
Hey, Eric, always good to check in with you from sunny San Diego. Eric Clark, portfolio manager over at the Rational Dynamic Brands Fund, joining us this afternoon. Hey, quick update from the northern part of the state of California. That magnitude 7.0 earthquake on the Richter scale off the coast of Northern California triggered a brief tsunami warning across a swath of the U.S. West Coast. The tsunami threat, though, declared over less than an hour later, even as the area experienced multiple aftershocks. It was the strongest earthquake to strike the contiguous U.S. since going back to 2019. That was when a 7.1 aftershock was detected in Eastern California during a larger seismic outbreak. Coming up next, we're going beyond the bell, and we're counting you down to the close for the closing bell This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That is not Carol Massar. Jess Manning in for Carol this afternoon. Jess, one of the reasons we love having you on the program is because typically use this time to kind of pick your brain a little bit about what's getting your attention over on the equities side of the newsroom.
Yeah.
You've been writing about chip stocks.
I have, because I mean, we know that's been all the rage the last couple of years too, but I also follow what technicians are watching when it comes to those different types of price levels when you're looking at resistance and support. So something that has come up in a lot of my conversations as we get toward the end of the year. So the SMH, that's actually the ETF that tracks semiconductor stocks in the S&P 500. So obviously you're going to have stocks like NVIDIA in there, but you're going to have Applied Materials, AMD, and among others as well. And it's more looking at how, and this was what was interesting because I was pulling some data, and at one point last month, NVIDIA outperformed the SMH by the widest margin on record. And normally you wouldn't see that. And this ETF has gone back since 2011, but you can also pull data going for the semiconductor sector in the S&P 500 if you want to go further back. But really that just means usually you don't see that happen for such a wide margin with NVIDIA. But obviously that has to do with the rebound it had after underperforming in the third quarter relative to some of its peers. But that potentially could mean that we might see a lid on some of the gains depending on what is happening kind of more broadly with some of these semiconductor stocks, because they are tied pretty globally in what it means for the economy. But still, I mean, they're signaling strength here. But what technicians are watching, if you look at the SMH, the 240 level is where the support levels are par for some of the lows that we would have seen, say, back in September as well as October. And we saw it test some of those levels back in November, but was able to bounce off of that. But that's something that John Colivos, he's the head of technical strategy at Macro Risk Advisors. Him and other technicians have been watching pretty closely to kind of give us a direction, not just what semis are doing, not just what NVIDIA is doing, but maybe potentially what it could mean for the broader market, because Sentiment Trader kind of did some analysis looking back over time when you see different things like this happen. And usually it's not necessarily doom and gloom in any way for the S&P 500. It's more in the shorter term, maybe the coming month, the coming couple of months, what typically when you see something like this happen, what it could mean as far as just a slight pullback and maybe put a little in gains for the S&P 500. So this is one of those conundrums because, as you know, Tim, coming out of COVID, there's a lot of different telltale signs and things people like to look at that sometimes hasn't always worked, though, because if you think about the last couple of years, the doom and gloom, right, going into 2023, as well as this year too, where people lost out on some of these double-digit gains we've continued to see. So it's a little tricky when you're trying to use timing tools, which obviously people say don't use that when you're looking kind of more broadly in the market. But this is something that's been interesting, that's kind of been happening underneath the surface when you're looking at chip stocks.
So, okay, so how do you think about the rise in NVIDIA and like the outsized role that has now in the S&P 500, in the NASDAQ 100, the way it moves kind of everything?
Right.
The way you have some companies or some banks putting out notes that talk about the importance of NVIDIA's earnings. You always talk about the implied moves following earnings. How does that factor into the technicals here?
So that's big too, because to your point, if you're looking at NVIDIA, I mean, it has roughly a 7% weighting in the S&P 500. Apple's also around 7%, Microsoft's around 6% as well when you're looking at that. But that kind of sway, not even just for the Philadelphia Semiconductor Index for those chip stocks, but also more broadly, like if you could see NVIDIA either up 1 or 2% or down 1 or 2% for a particular session, and that could potentially, potentially you would see outsized gains, or potentially you could see other sectors that could be rallying, but say like energy doesn't have the same type of weighting that it would have been, say, when Exxon would have been in the top 10 companies of market cap if you would have gone back about 20 years ago. It's just a different type of dynamic when you see how it's kind of front-loaded here with some of these growth and technology names. But that's not necessarily a bad thing. I mean, these are companies that are obviously turning profits that are justifying their valuations. It's going to be interesting, though, to see how things continue to play out, especially the last couple of years where people underestimated chip stocks and technology, and then they kind of got burned by that.
Jess, it's not a record close today.
Unfortunately,
we have
I know, but
It's
still 56 though, still so far this year through yesterday.
Exactly. Hey, we're going to have much more over in the next hour with Jess filling in for Carol Master this afternoon. Now, though, we're heading to our TV team for our cross-platform coverage of the close. It's called The Closing Bell right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell, a global simulcast covering it all. It starts now. Scarlett Fu in the TV studio, Tim Stenovic in the radio booth, Jess Menton in for Carol Master today as we welcome our audiences across all of our Bloomberg platforms in a day. Tim Stenovic, where we see red pretty much across the screen here, a pause in the equity market rally.
Bitcoin not even above $100,000 right now.
Oh, it's over now.
Can you believe that?
I just put, oh gosh.
What happened?
Gosh darn it.
Never mind.
What you just talked about this?
No. He was joking that he put money into it.
Oh.
And then I realized that was a bad joke, so, but thanks for dragging me there.
that would be pretty much like you, though, Romaine, right?
Yeah, sure.
Yeah, if you're allowed to. Look, though, I think we'll all remember where we were at that moment. You got that notification, Romaine.
Yes, I did get that notification.
The fundamentals. That's the question everybody still has.
The fundamentals of Bitcoin?
Yeah, that's the question everybody
Scarlett and I just looked at each other.
Bitcoin? What?
Yeah, as someone who hosts a premier show on crypto,
Yeah.
what are the fundamentals?
There are no fundamentals.
Okay,
there's still many people out there who argue that, they're greater fool theory. The idea that this thing only goes higher if there's somebody else out there to buy it for more money. There's no cash flows with Bitcoin. Those are what the skeptics are saying. But you know what? Those skeptics have been saying this for years. Yeah. And the people who are bullish on crypto and Bitcoin have been laughing all the way to
And they've been saying that about gold for years. And then the outlook is for gold to hit 3,000 from Bank of America. So there you go.
There you go.
But, you know, gold is a traditional measure of value, and it's served a purpose throughout history. Bitcoin hasn't exactly done that.
Yeah, but it's come a long way here, so we'll see how much further it can go. I mean, even Hilly Welch getting in on the action there. All right, down days, red arrows across the board for Dow Jones Industrial Average. Going to finish the day lower by roughly 200 points, or about 0.5%. The S&P 500 down 11 points, or 0.2%. The NASDAQ also down about 0.2%, but the real decliners today were in that small, mid-cap, and that industrial space. Dow Transport's down 1.1%. S&P mid-cap's down 0.8%, and the Russell 2000, Tim, down 1.3%.
The S&P 500 today, we saw 189 stocks did move higher in there. The decliners, 313 stocks did move to the downside.
And with stocks kind of losing ground into the close, you see more decliners than advancers, at least among the sector groups, right? Materials losing 1.4%, industrials down 1.2%, backing up what Romain was just saying about the Dow Transports losing ground, and healthcare also down more than 1%. Your best performers, consumer names, discretionary and staples are higher. Energy also gaining about 1/3 of 1%.
All right, let's take a look at some of the stocks that did finish in the green today. We got to talk about American Air. Look at that. American Airlines up 16.8%, having its best day intraday in years. The company did boost its adjusted earnings per share guidance for the fourth quarter. There was no investor day. There were no earnings. The company just coming out and saying that. Also announcing an agreement to extend its co-branded credit card agreement with Citigroup. You also saw shares of Brown-Forman end up moving higher in the day. They're the owners of Jack Daniels, Woodford Reserve, and other brands. The company did forecast that return to growth this fiscal year thanks to gains in international markets and normalizing inventory levels, up by 10%.
But what was the commentary they had, right? I mean, they're concerned about tariffs.
Yeah.
Because they think, they're concerned about retaliatory tariffs. Is that the idea? And that might hurt their exports of whiskey to others?
I guess, yeah. but they're actually excited for the second half of next year. They expect the performance to accelerate through the second half of next year. But remember what happened in the first Trump administration? I remember going into a liquor store, and there was a sign up that said that because of retaliatory tariffs, wine prices were higher.
Yeah, I remember that too.
Yeah. So, yeah, we'll wait and see. Do I have time for Five Below, or do we want to do earnings, guys?
We actually have Petco that just came out, so let's do earnings, yeah? Petco, who owns a pet here?
Me.
There you go.
I have a cat.
Cat owner there, dog owners here.
Mm-hmm.
All right, third quarter comparable sales rose 1.8%, better than the expected 0.7% increase. Net sales overall, $1.5 billion, matching the average analyst estimate as well. So the net sales meeting analyst estimates, of comp sales of a little bit better than what was anticipated. Still a net loss for the quarter, $16.7 million, narrower than what analysts had been anticipating. They were looking for somewhere in the neighborhood of $19.7 million.
Yeah, I want to get into some of the top decliners here. I would point out, though, that Petco, I love the ticker symbol WOLF here, but it is among companies in the Russell 3000 reporting earnings today that have the highest short interest as a percentage of float right now. So actually, it's 30% of their shares shorted by that measure. But if you want to go and look at some of the biggest decliners here today, I want to point out Synopsys here, SNP as the ticker symbol, and this down 12%, worst day since March of 2020. So this is the maker of electronic design, automation software. It's a macro headwinds were weighing on its outlook, especially if you're looking at its first quarter forecast that is weaker than expected. Another one wanting to point out here is you're looking at shares of Uber, also down 9.6%, its worst day since October of 2022. Also, Lyft shares falling on the back of this. So if you're looking at here, those extended declines after Google's Waymo said it's expanding its ride-hailing service to Miami. So Waymo will begin offering rides in 2026. And then lastly, looking at American Eagle, AEO is the ticker symbol, down 14%, its worst day since November of 2023. So we're staying a little over a year here, but those shares falling after the apparel retailer did lower its full year comparable sales forecast, guys.
All right, want to kiss on what's happening in the bond market as well. Nothing is really the point. You're seeing a little bit of lift here for the 2-year yield, up by about 1 basis point, pretty much flat on the long end, but you're not going to see a lot of position taking into tomorrow, into Jobs Friday.
And I think, too, I mean, we talk about Jobs Friday, obviously 8:30 a.m. out of Washington tomorrow, and it gets to this idea of what actually moves the needle between now and the end of the year. We kind of know what the expectations are for that Fed decision on December 18th. Maybe the report tomorrow, the jobs report, can change that. But it seems like a lot of investors are kind of content with the gains they've had. A lot of them have already left. You're seeing that reflected in the volumes.
220,000 is the number of jobs that economists surveyed by Bloomberg are expected to be added during the most recent month, the month of November. number, of course, would be a market increase from just the 12,000 in the prior month. But remember, you had the natural disasters, the hurricanes, you had the impact of the strikes, you had the folks not necessarily responding to surveys, so the data wasn't as strong. We'll see what happens, but also what it means for the Fed in the coming weeks.
Also keeping an eye on payrolls tomorrow. So this is to be the last report that we'll see ahead of the Fed decision on December 18th. So I like to look at what the options market is implying here. So the S&P 500 implied to swing about 0.7% in either direction tomorrow.
Yeah.
That's just a little bit under in line where it's been over the past few months, guys.
You look back at Enterprises out with their earnings. This, of course, is the maker of servers, now a standalone company. Fourth quarter net revenue, $8.46 billion. The Street looking for $8.26 billion. The fiscal fourth quarter adjusted EPS coming in at 58 cents a share, a modest beat over Street estimates of 56 cents a share. Here's your guidance. For the fiscal first quarter, the company says that it sees revenue growth up in the mid-teens %. The Street was basically looking for about 15%. So it looks like that forecast is pretty much in line with estimates. And for first quarter adjusted EPS, 47 to 52 cents is your range that the company is giving. The Street, on average, looking for 48 cents.
All right, taking a look at Lululemon here. The company is upgrading its net revenue and earnings forecast for the year. For the fourth quarter in particular, third quarter in particular, comes in at $2.87 a share on earnings. Net revenue, $2.4 billion. Both of those are a beat. For the full year, they're looking on the high end now of revenue to come in about $10.49 billion. That is an increase. Also in terms of the full year earnings, same deal on the high end, coming in at $14.16. So upgrading their estimates and beating solidly there for the third quarter.
All right, let me just jump in with DocuSign, because that company is boosting its full-year revenue forecast as well. It's now looking for full-year revenue of $2.96 billion, whereas previously it saw about $2.94. So it's still giving a range, and it's still a tight range, but it is a slight upgrade on that. Fourth quarter revenue will also be higher than what was anticipated by analysts, $758 million to $762 million. Analysts were looking for, on average, $755 million. And third quarter top line and bottom line beating analyst estimates. Stock up about 5.5%.
Okay, let's look at shares of Ulta Beauty, which are up by 9% as we speak. The company sees fiscal year net sales $11.1 billion to $11.2 billion. They saw $11.0 billion to $11.2 billion, so narrowing that guidance a little bit. The company also saying it still sees fiscal year net new stores 60 to 65. The estimate was for 60.5. I don't know you have half a store, but it's the average, I guess. Sees fiscal year comp sales -1% to 0%, saw -2% to 0%. The estimate was for about 80 basis points to the downside. Ulta does see fiscal year net sales coming in at $11.1 billion to $11.2 billion. Once again, shares in the after hours right now higher by 8.8%.
I want to point out here, GitLab is naming Bill Staples as its new CEO right now, just kind of getting a check here on what it is doing. In after-hours trading, if you're seeing this stock actually rising about 7%, actually up 8% now in after-hours trading on the back of that news. And Tim, of course, was just talking about when you're thinking about actually what's going on with the buybacks and Lululemon boosting that. I mean, this year is actually on pace to be one of the best years on record for buybacks.
Well, we're going to have to ask Poonam Goyal about that a little bit later on our program from Bloomberg Intelligence. She's going to be joining us a little later in the 4 o'clock hour. But for now, that is going to do it for our cross-platform coverage here on Bloomberg TV, Bloomberg Radio, YouTube, and Bloomberg Originals. We'll see you guys same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, now when you're thinking about inflation and how much it has strained consumers' finances in recent years, it's also affecting charities that depend on donations for their philanthropic work. In a new study from Wells Fargo on Giving in America Today that analyzed consumers' feelings on charitable giving, 3/4 of Americans say that generosity is a part of their core values, though half feel like they don't have enough money to give. Although giving remains steady for most, nearly a third are donating less this this past year. So what exactly gives, Tim? And as the calendar nears 2025, can a new incoming administration in Washington change those feelings in anticipation of favorable tax policies? So here to unpack the survey for us is Stephanie Buckley, Head of Trust and Philanthropic Services at Wells Fargo, joining us from Los Angeles. Thanks so much, Stephanie, for being here with us. Walk us through sort of this latest report, and why is it that you're starting to see not even just, inflation that, especially over the past few years, that had weighed on consumers, but you're also seeing it in particular corners of the market when it comes to charities and those donations?
Absolutely. Our survey result was very interesting. I was interested to see what was going on. And as you noted, roughly 29% gave less. But yet 78%, again, as you noted, have generosity as one of their core values. So it's an interesting mix. And in terms of the inflation that we're seeing, a lot of it is, if you think about it, like if you go to the grocery store for $100, I used to be able to get a whole basket of groceries coming out. Now maybe I get a bag of groceries. And I think people are really feeling that pinch. And so that is carrying over into the philanthropic world. And that's what we're seeing.
Is it going into the philanthropic world this year in a different way than last year? I mean, by pretty much every measure, inflation has eased from where it was a year ago and, of course, where it was 2 years ago.
Yes, but what we're seeing and what we're seeing with our clients in particular is yes, it's easing a bit, but they're not feeling that it's easing enough that they have a lot of extra funds to give. And that's what the survey was showing, is that people just don't feel like they have the extra. But the other side of it is they still feel that tug, that pull to give to charity and to help others who are in need. And so the surveys showed that core value, most of them still have the core value of generosity. And we even saw some what we call the sacrificial giving, who will say, I'm going to defer my own needs to help others who may be in a worse situation than I am.
So when it comes to different types of tax policies, I know a lot of people want to point to that as potentially something that could help out this situation, but walk us through kind of the difficulties there and what would need to happen in order to see that help charitable giving, because there's a lot of different types of things when it comes to deductions that are a little bit more convoluted and not as easy to decipher.
Yeah, that's a great question. What we're seeing is, with the past tax changes, the standard deduction went up significantly. And what that meant is that less people are itemizing their deduction. And for gifts to charities, that's an itemized deduction. So for some people, they feel like, well, if I'm not going to get that extra tax benefit, and maybe I don't feel like I have a lot of extra money, I'm not going to give. But for those who are itemizing, that is a big lever that they can use, because essentially that charitable gifting, if they are itemizing their deductions, whatever they give to charity is going to proportionally reduce some of their taxes. And so we are seeing that, and that was a big thing that came out when the standard deduction raised significantly. And as we know, with the current incoming administration, they were the ones that did that big jump in the standard deduction. So likely it's going to maintain. And for charities, that shift was focusing on their larger donors who are itemizing, and those donors who give, maybe it's the $10, the $100, the $1,000 amounts, which might seem small, but honestly for charities, that is a significant lifeblood for them to get those smaller amounts, because those smaller amounts over a large amount of people do add up for them. So it is important for all levels of donors that give to charity to continue to give to support the charities that are doing the important work.
Stephanie, I'm wondering if your survey accounted for income level or net worth level in terms of people who gave, and what you can tell us about how giving changes across income spectrums, like as a proportion of how much money people have, how much they give.
No, again, when it comes to giving, interestingly enough, what studies historically have shown, not just the Wells Fargo study, but those at the lower income levels often give a higher percentage of their assets. And the other piece, too, that I think is important to talk about in terms of giving, it's not just giving money, right? So we call it the treasures, the 5 T's. It's also giving time. It's also giving of your expertise. It's giving, in addition to the treasure, it's giving testimony, it's the actual service. And so part of it, what I think is important when we talk about philanthropy is to broaden the conversation beyond just the treasure in the 5 T's. It's to broaden it to all sorts of aspects. And when you are that inclusive, what we find is those who are at the lower income levels typically give more to society than those who are at the higher, in terms of like a percentage of assets.
So how are the demographics of donors shifting?
Well, again, as I mentioned before, if we're talking about what usually the measurable piece of it is the treasure, right? We can measure how much people are giving based on tax returns or what charities are reporting that they received for donations in a particular year. And so again, with the higher standard deduction, as I mentioned before, what we're measuring the treasure amount is those who are in the higher income, who have the ability to overcome the hurdle of the standard deduction, are giving more. They're becoming the larger base of donors for a lot of charities. And charities we are seeing that in the giving numbers. And as part of that, they are also looking at those who, like I said before, give those lower amounts, and those amounts are critical. So I think the important part for people to realize is, maybe you're not getting the benefit of the deduction, but the charities still need those gifts. You say, well, $10, what is that going to do? It actually does a lot, especially when it's multiplied across a larger group of people who are giving.
So let's look forward to 2025 and how you and the team at Wells Fargo are thinking about a new administration when it comes to charitable giving. We know a big part of the priorities of the incoming Trump administration is to extend the Tax Cuts and Jobs Act when it does expire next year. How did that shift? I believe it was 2017. How did that change charitable giving in the first administration based on previously because of rules about deduction and those sorts of things?
Yep. In some ways, as I've said before, it's changed who is giving, but in other ways, I think it also has encouraged those who maybe are not in agreement with the administration to really give to support the causes that are important to them. So one of the things we're seeing is, for example, maybe women's rights. A lot of people are rising up and saying, you know what, that is important to me, and I want to give to that cause. So in other ways where they might not have been as encouraged to do it before, they're really focusing on that. And that's another note, too, that I think is important to be aware of, is that a lot of people want to be able to be strategic with their philanthropy. They want to be able to say, like, hey, whatever I'm giving here is really making a difference. And so as part of that, it's important for people to think about, maybe just not what we call spreading pockets of sunshine here and there, but to say, how much do I have in my budget to give to philanthropy or to give to the charities I want to support this year, and to focus a good portion on those particular causes where they know that giving a larger amount can get a bigger impact for what's truly important to them.
Stephanie Buckley, Head of Trust Philanthropic Services at Wells Fargo, joining us this afternoon. Do appreciate it. Hey, a quick redhead crossing the Bloomberg terminal. Chevron plans to slow production growth in the biggest U.S. oil field next year, and the most definitive sign yet that President-elect Donald Trump faces an uphill battle to ramp up American energy output.
Maybe that's cash, baby, cash instead of drill, baby, drill.
Oh, look at that. Jess Menton. Love to see it. More Business Week right now.
And it is 4:21 on Wall Street. We check the markets for you all day long at Bloomberg. Chevron to cut spending, slow growth rate in the top U.S. oil basin. That stock is higher right now in the after-hours session. Investors rattled by the earthquake in California and by worries the Fed might not cut interest rates like they're hoping. Strong earthquake in California triggering a brief tsunami warning earlier. That risk has now passed. Traders also gearing up for that key jobs data coming out tomorrow. The Dow finishing 248 points lower. S&P 500 down 11, NASDAQ down 34. The yield on the 10-year 4.17%. Spot gold down about 0.7%, 26.31. NYMEX crude, it also lowered down about 72.26 a barrel. Bitcoin also lower. It closed, well, it doesn't really close, ever does it really, but Bitcoin trading right now at 99,331. That is way lower than the 103,000 we saw earlier today. HP Enterprise seeing adjusted first quarter earnings 47 to 52 cents a share. The estimate had been for 48. That stock trading higher in the after hours session. Ulta Beauty boosting the lower end of its net sales forecast. That stock surging dramatically. Lululemon, you were talking about this, boosting its full-year outlook on strengthening demand, showing the upscale activewear brand is making progress in fending off upstart competitors. That stock up just about 6% in the after hours, and shares of American Airlines soaring 16% to the close today. That's after raising profit expectations, citing strong travel demand and higher fares. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Whenever you get your podcasts, I'm Denise Pellegrini. That's a Bloomberg Business Flash. Back over to you guys.
Thanks, Denise. We appreciate it. Jess Mitten and Tim Stenovic here, the Bloomberg Interactive Brokers Studio. I want to point out among some of the biggest after-hour movers today post-earnings is Lululemon, ticker symbol LULU, up almost 7% after the closing bell here. So the athleisure wear maker rising actually after it boosted its full year outlook and authorized a $1 billion boost in its stock buyback program. But for a stock that's lost roughly a third of its value so far in 2024, momentum must improve in 2025 to meet the company's plan to double sales to $12.5 billion by 2026. So who better to break this down? Joining us to unpack more, Poonam Goyal, senior analyst for e-commerce, athleisure, off-price retail at Bloomberg Intelligence from New Jersey. Poonam, it's always great getting your insight on all these things. Walk us through sort of the boost that we're seeing in after-hours trading, but then in context with the losses it's seen so far this year.
Sure. So Lululemon has had a tough year, in all honesty, and part of that is because of product execution. They had a neutral color palette earlier this year, which didn't resonate with customers. As they've improved execution and really brought the product back to life with their customers, we're now seeing it in the results. We're seeing better results. Sales in the quarter grew 9% ahead of consensus 7% in their own expectations. And not only did sales grow, but margins also did better. They had a 150 basis point increase in gross margin, which was well ahead of expectations. So what this tells me is that they're doing things right. And that means that the customer is responding when they put the right product, the right color back into the stores, into their arms. So I think as long as they continue to do that, moving into 2025, they will be on track to meet their plan to get to $12.5 billion in sales by 2026.
Usually when I think of the Lululemon athleisure wear, it's kind of those like $100 sort of yoga type pants that a lot of women want to go because they're very colorful. But a lot of women will also find other options at maybe say TJ Maxx or Marshalls or other types of brands there, maybe department stores. How are they sort of mitigating that type of factor? Because they do have other products that are well beyond that. And is that still a strength of a consumer that's willing to go in and buy things that are a little bit more pricey?
Yeah, well, there's two things that are driving that. One is brand, right? So those that want the brand want the brand. It's a luxury statement in athleisure to be wearing $100 leggings. Second, I think it has to talk about quality, right? When you're going into the Marshalls and into the TJ Maxx and some of the lower tier legging offerings, you're not getting the same quality and the same fit. So for someone who really wants that, will pay up for these leggings, or even a competitive brand, right? Any legging that has comparable quality will not be $20, $30. It will be north of $80, and that is what the customer is willing to pay. So it is a different customer, even today.
What are the struggles that Lulu's been dealing with in terms of the headwinds that they're facing, execution in store, competition, and what specifically did you find that they were doing right for this quarter to lead to that margin gain that went ahead of expectations?
Yeah, so competition is a headwind that I think will remain, right? I don't think that's in their control, but I think when it comes to execution and product, it is something that they can control. And they've talked about this last quarter and even earlier in the prior quarter. They talked about not having the right colors. And just by changing something as simple as that, they're starting to see better results. So I do think it's about learning where the mistake was. It's about trying to, move past that as quickly as you can within your supply chain. And once you get that right, the customer is responding. So that's what went right this quarter.
How does it fare compared to some of its competitors if you're thinking about Puma, Nike, Adidas, Under Armour?
So a little different, right? Because they play in footwear more meaningfully than does Lululemon. So I think it's a little bit of a different story. Nike has its own challenges right now because it too is trying to spur a turnaround with new management in charge. Adidas has done phenomenally well with lifestyle, with the Sambas, the Gazelles. I mean, they've just hit a home run. So I think once you have the right product, it's really about product, and you get that right, you will score with the customer.
What's the innovation that's happening in this space, like in terms of trends? I mean, some of this stuff seems not to go out of style at all, but I'm like a layperson, so I don't really understand that. But what are the trends that like they're on top of right now that's resonating with consumers? Help me out here, because I have no idea what's cool.
So, at the end of the day, it's about making sure that you have the right fit and the right color, right? That's where you can differentiate in the materials. But I think what a lot of these retailers are doing, or brands are doing, is that they're taking the technology that they have in a very well sought after product and creating adjacencies with it. So Lululemon, they claim their success on the Align leggings, and using that technology and bridging it forward into outerwear, into other aspects of the brand, into men's. I think that's really helping, and it's creating an aura or a brand that resonates beyond just that core legging that they're known for.
So what do you think this kind of means more broadly when you're thinking about the retail space during the holiday shopping season? As far as the companies that you cover, what does this kind of tell us for this? Because as you know, the fourth quarter is the strongest quarter usually when it comes to consumer spending, and you look at the Atlanta Fed GDP Now model, I mean, that's above 3%.
Yeah, I think the consumer is definitely choosing where they want to spend, but they are spending. We saw it in the Black Friday to Cyber Monday numbers. They are spending. The numbers beat expectations, which means that there is intent to spend. Yes, deals still matter, but I think if they have to make choices, they're going to pick the items that they want. And we're seeing that especially on the discretionary side.
Who does Lulu have to be most scared of?
I mean, really anyone and everyone, right? Premium priced product in their space, their competitors, I think is who they have to worry about the most, whether it's Vuori or whether it's even a Nike. Competition is building, so they need to be on the mark all the time.
All right, Poonam, thanks so much for joining us. It's always getting great insight on all things retail with you. Poonam Goyal, Senior Analyst for E-commerce, Athleisure, Off-Price Retail at Bloomberg Intelligence, joining us from New Jersey, Tim.
All right, well, looking at shares of Hewlett-Packard Enterprise, kind of jumping all over the place, higher by about 1.6% right now in the after hours. The company did report better than expected quarterly revenue and a jump in sales of servers to power AI work. We've got with us right now Crawford Del Pret, president over at IDC, joining us here in the Bloomberg Interactive Brokers studio. Welcome back, Crawford. You've had a chance to dive into these numbers a little bit. What sticks out to you?
Yeah, so great to see you guys. Thanks for having me. So look, this is a record revenue quarter for HPE, and I think it's indicative of a number of things. It's indicative of this extraordinary server and storage growth that we're seeing. So, just for context, the server business was a single-digit growth business for multiple years. IDC overall, we forecast, wait for it, 37% growth in servers and storage this year in dollars, okay? So what's driving that? It's an architectural shift to AI, right? And we are seeing that service providers, and then ultimately enterprises will need to upgrade their infrastructure to support these new, what we call AI workloads.
So, especially because when you hear AI, you always think of maybe companies like an NVIDIA, maybe not as sexy as a name quite like this, but when it comes to especially sort of the IT spending side of things, with HPE as well as some of its other competitors, who do you think can really benefit from this beyond, say, when we're talking about other type of chip-type, semiconductor-type stocks?
Yeah, so when you start looking at what's happening with AI, and this is what you're seeing in HPE's numbers, is that you have to upgrade your overall infrastructure. So that means that companies like HPE are benefiting, companies like Dell are benefiting. You're seeing also, ultimately, you'll see the software stack associated with managing your infrastructure. Ultimately, your applications will benefit, but that's gonna take a longer period of time. But in the near term, beyond the NVIDIA, you're seeing that the entire infrastructure stack needs to get upgraded. Now, let's just get back to HPE for a second. What's also happening at HPE is that a number of years ago, they went on a diversification strategy. They bought a company called Aruba Networks, and Aruba Networks expanded their footprint in the enterprise. So last quarter, HPE had a tougher reaction from Wall Street because they saw their gross margins dip. They saw them dip again, but that was really related to a slowdown and a stall in the enterprise infrastructure space in Aruba Networks, what we call the edge of the network, the wireless and wireless infrastructure. And as that infrastructure now is working through its inventory, HP saw a sequential increase in that business, even though it's still down 20% year over year. Sequentially, that business is starting to stabilize, and their gross margins will start to have started to stabilize as well, although, like I said, they were down about 400 bips. Now, I think going forward, what you're seeing at the company is, and you're seeing this at other companies as well, like Dell, that the demand is just sustained for infrastructure, and the demand for, in HPE's case, the demand for infrastructure around the network will likely increase. Now, don't forget, they announced that they are intent to acquire Juniper Networks. That will add their ability to get the service provider side of the network, and they expect to close that deal sometime in early 25. So it's a very interesting story as this company is really reinventing itself and is seeing the benefit of that reinvention in their numbers.
What's it trying to leave behind?
So what it's trying to leave behind is running on that x86 Intel treadmill of commoditization, right? I mean, so, HPE sat back a number of years ago and said, where are the largest profit pools that we can prosecute in the enterprise? Networking hit the top of the list. That's why they went after Aruba. Software, that's why they brought out things like Esmeralda. Storage, that's why they, and by the way, Dell bought EMC, right? Yeah. Yeah. In the case of HPE, they brought out Electra, which is their new storage platform. Now they're looking at networking and saying, well, there's also this service provider networking, this really high capacity, high bandwidth networking. Juniper adds that. So what they're trying to do is they're basically the gravitational force of commoditization is what they're trying to leave behind.
Crawford Del Pret, sit tight. We're going to do some news, and then we're going to come back with plenty more with you. Crawford Del Pret joining us from IDC. He's president over there, talking about HPE, and we'll get into a little bit when it comes to Supermicro as well. Shares of HPE in the after hours higher by about 2.8% as we speak. As far as the broader markets looked on this Thursday afternoon, not a 57th record this year for the S&P 500, Jess.
Not yet, but
settle at 56.
Right, still snapped 4 consecutive days of gains, but we'll see how things shake up at the end of the week.
Look at that. The S&P 500 down close to 0.2%, the NASDAQ down 0.2%. More with Crawford right after this.
It is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. Governor Newsom has declared a state of emergency in the parts of Northern California impacted by that strong 7.0 earthquake that rocked the area earlier this afternoon. The governor saying he is concerned about damage, but also saying he does not have any details about what damage he's concerned about. Stocks closed lower today. Eric Clark, portfolio manager, Rational Dynamic Brands Fund, telling us earlier on Bloomberg Business Week, the stock market investors do seem skittish to him, but things should stabilize next year.
There's a lot of uncertainty with the election and the results, and the Fed's been gating off the economy for 2.5 years. So when that all changes, some animal spirits get unleashed. But I think heading into 2025, we should have a good, stable economy with an administration that's clearly more pro-business and less regulation, hopefully maybe even working on the government and their operating efficiency. So, we see lots of positive things.
Not a lot of positive things today, though. The Dow down 248 points, S&P 500 down 11, NASDAQ down 34. The yield on the 10-year, 4.17%. Spot gold down 0.7%, 26.31. Brent crude and West Texas crude both lower. West Texas crude down about 0.2%, 68.43 a barrel. Bitcoin elating, then disappointing a lot of investors today. It is trading below that 100,000 level right now. Lululemon edging up its full-year outlook. That stock is about 8% higher. OpenAI introducing a higher-priced paid tier for its chatbot, ChatGPT, and this new ChatGPT Pro will cost $200 a month. And Roaring Kitty is back with a cryptic Afternoon X post from Roaring Kitty, a.k.a. Keith Gill, who rose to fame in 2021's meme stock mania. Shares of GameStop, one of Gill's original favorites, spiking as much as 14% earlier today, triggering a volatility halt. They closed about 6% higher, and AMC Entertainment, another darling from that era, well, that jumped as well. For on-demand news 24 hours a day, subscribe to Bloomberg News Now whenever you get your podcasts. I'm Denise Pellegrini, and that's a Bloomberg Business Flashback. Over to you guys.
Thanks, Denise. We appreciate it. Jessamine and Tim Stenovic here in the Bloomberg Interactive Brokers studio. We're actually back with Crawford Del Pret, president at IDC International Data Corp, joining us in the Bloomberg Interactive Brokers studio once again. And so we were just speaking, Crawford, about obviously HPE posting higher than expected fourth quarter revenue due to that continuing AI demand, and looking at that stock, HPE, and after hours trading up close to 2%. But another stock I wanted to point out that a lot of attention is given to is Supermicro, SMCI. Now, at a certain point, it was one of the worst performing stocks in the S&P 500 this year just because of those questions surrounding its accounting practices. Though if you look year to date, it's recovered some of those losses and it's actually up around 45%. You were talking about kind of the exposure when it comes to service providers. If you're thinking about like Meta, Salesforce, Microsoft, SMCI doesn't exactly have the same kind of broad reach that some of its competitors do. When it comes to a company like this, and especially some of the accounting news that has come past, how do you make of this and its stock performance so far?
Yeah, so when you look at Supermicro, it's a fascinating company because where an HPE or a Dell or Lenovo sells a broad range of products that address the needs of many, many different kinds of enterprises and also service providers, certainly Supermicro has a range of products, but really what they do is a significant amount of engineering and innovation, really for what we call ultra-dense service provider applications. And so you're a hyperscaler, so you're a Microsoft or you're a Meta or you're a Google. Supermicro is going to do that really, really tight engineering between the components as well, between component suppliers as well as the actual physical box, and bring that box out and allow you to have a very, very dense environment. The downside of that is that they don't have the same distribution channel, they don't have the same reach that you would see at a Lenovo or at a Dell. So the concentration of customers is very, very high.
Oh, it's incredible. You go to this, the concentration of customers, the concentration of who they're buying from?
Both.
Okay.
Yeah, both.
Because I see that on both. It's pretty remarkable. I mean, they're a huge customer of NVIDIA.
Yeah, oh, absolutely.
It's like they're one of the top customers there.
So think about the AI, and actually, this is a great metaphor. Think about the AI kind of market right now as an upside-down triangle. At the top of the triangle are the service providers, and that's where the majority of your demand is coming from. That's the animal that's eating all the NVIDIA processors right now. And
so that's the Microsofts and the Amazons.
That's the hyperscalers, the Microsofts, the Amazons, the Salesforces, the Metas. And as that triangle comes down, it gets narrower and narrower because the enterprise customers haven't really stepped up and bought into generative AI in the same way within their data centers.
Is that, but if they do it, wouldn't they just go to a hyperscaler?
Well, that's just it.
Rather than doing it on-prem?
Potentially. But what we see a lot of customers, I'm not saying this is a customer, but a customer like a JP Morgan or someone like that, who have a significant investment in custom applications. And those custom applications, they want to be able to take those data stores that they're creating in their custom applications. Those are in their own data centers, and they will ultimately want to train their own large language models and have their custom applications be able to use those large language models to be able to get generative AI answers to serve their customers and their employees in new ways. That is when the bottom of the pyramid starts to get wider, because then enterprises start buying into this technology. But we're not there yet. Where we are is the top is what's consuming the vast majority of these processors. And what's interesting about generative AI is that usually with these compute architectures, it becomes a law of diminishing returns, where the performance starts to tap out no matter how much capacity you throw at it. We haven't seen that yet with generative AI. You can keep throwing processing capacity at it, and the system gets more and more and more capable, and you can also get significant speed gains.
Yeah, one of my favorite functions in the terminal is SPLC, so you get to see the supply chains. I'm sure that's what Tim may have been looking at too. You can see their customers and suppliers.
So yes, that's what I was looking at.
But just for our radio listeners so that they know, but so you can get a gauge there. So Supermicro has been in the S&P 500 for less than a year. It got added.
This time,
this time, right? It got added toward the end of the first quarter back in March. So, I mean, what do you make of kind of like what's next here after it's trying to get over this hurdle with the accounting issues?
Yeah, again, at IDC, we don't pick stocks, but I will tell you that from a performance standpoint, there is such a significant amount of engineering and a significant amount of demand within that company. I believe that in the long term, they are going to continue to benefit from this AI boom, particularly as service providers continue to invest. So, take that with what you will, but I don't see a world where Supermicro is not continuing to participate in this market.
Okay, Crawford, I'm going to go off script a little bit.
Sure.
Because I want to get your take on this. You're in Boston, is where you're based?
Absolutely.
Okay, you spent a lot of time in the Bay Area?
Uh-huh.
Have you taken a Waymo?
I have not taken a Waymo, but I have crossed the street in front of one.
And it didn't hit you?
It didn't hit.
Okay. You're still here today. All right, that's what I like to see.
Yeah.
Here's why I ask. I was out in San Francisco a few weeks ago. Now anyone can take these Waymos.
Yep.
You don't have to be on a list anymore. I downloaded
and you
the
can
app.
Go further, right?
I was only able to go within San Francisco. That's all I needed to do. I know they're training them. Yeah, they're training them to go to the airport now. You can't get on the highway with them yet. It blew my mind.
Mm-hmm.
It was incredible. I was a skeptic. I'm totally sold now after this 28-minute trip. Are we going? Where do the companies that you cover, just in the last minute that we have, where do the companies that you cover play in that space? Like if we're working toward a world where these are going to be all over, how do the companies that you cover benefit?
Boy, there's a number of ways, and it also blew my mind. One of my team members sent me a video of her in a Waymo, and the thing is bananas. It's driving itself around. A lot of ways. So companies think of a driverless vehicle as a little data center, a little smart connected node on the network. It has its own network inside of it, and it's obviously consuming a lot of processing power from the network. But what's different about a self-driving vehicle is the amount of processing it needs to do. We call this compute at the edge of the network, because it has to decide very, very rapidly, is that a human, is that a mailbox, is that a dog, is that a shadow? And it has to be able, it can't compute that at the core of the network. It's got a computer at the edge. So the kinds of companies that benefit from that is, surprise, NVIDIA, where they've been a key partner to FSD, so, full self-driving at Tesla for quite some time. Also, over time, maybe companies people don't think as much about, Samsung. So they're going to be making a lot of the semiconductor content, as well as the LED technology, where you see these cars are become big curved displays over time. What's going to continue?
We got to leave it there.
got it.
Crawford, always love when you join us. Crawford Del Pret, president over at IDC. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Jess Menton. I'm Tim Stenevec. And we're going to get right back to Crawford Del Pret. He is president over at IDC. He joins us here in the Bloomberg Interactive Brokers studio. We've got a bit more time with you. And, when we were chatting just now before we did some news, we were talking about driverless cars. Yep. And I'm curious about, you haven't had the chance to ride in one. Some of your employees have, you mentioned. I was saying that I rode in one in San Francisco a few weeks ago. Anyone listening or watching right now knows that because they can't stop talking about it.
Was it Jag? Was it?
It was a Jaguar. Yeah, it was an electric Jaguar. It was totally clean. I got in. You can choose the music. I was FaceTiming with my parents to show how cool this was. But I was so skeptical of the technology before, and now that I was able to experience it, it was just absolutely remarkable. And I do envision a world where we see auto accidents just plummet as a result of technology such as this. Am I dreaming, or is that something that happens in our lifetime?
No, I don't think you're dreaming. I think it does fall in the category of the old Paul Sappho from Stanford phrase of "Don't confuse a clear view with a short distance." Right?
Okay. He's a futurist.
Yeah, he's a futurist, and I think we are going to get there. But I think we're going to go through kind of an icky period, and that period is where the self-driving cars don't make mistakes, but the humans do. And I think that's going to have really tough impact on things like insurance, and it's going to make it potentially more expensive. And that may actually get to a point where people start to say, do I want to be the person not using self-driving because it costs a lot for me to get in this vehicle and use this vehicle, because the risk that I may be distracted by doing something, looking at a phone, having a bad day, whatever, the car never has that. So I think eventually we will get there, but it's going to take us probably longer than people think, because roads are complicated. What's not going to, and they're complicated all over the world, and all. I mean, self-driving in Rome, gives me a headache. But I think that we are very close to being able to see it on highways, being able to see it on in a lot of U.S. cities and in a lot of North American cities, and I think we're probably it's probably closer than people think. I think it's probably in the next 5 years, you're probably going to start to see more and more modes, more and more companies bringing out the kind of technology that Tesla can bring out, where you've got one hand on the steering wheel, but really, if you want to go pretty full self-driving, you can.
I've actually never been in a Waymo or anything like this.
You're not the only one.
Yeah.
There are only a few cities where they do this. They do it in Austin. They do it in Phoenix. There was a story about Miami today.
Of course, San Francisco.
Yeah, in San Francisco.
So when you're thinking about legislation coming out of Washington, obviously we have a new administration coming in, but kind of realistically over the course of years, because this will take a while, as you were mentioning, what do you think would need to happen? Because also you were talking about the complications of roads and depending on what type of city you're in.
Yeah, so there's going to be a lot of legislation that's going to need to be addressed here, which is why I think it's going to take a long time, much longer than the 5 years I mentioned, for full self-driving. But the kind of assist where what Tesla has today is really only what Tesla has, where you have a couple fingers on the steering wheel and the car is doing the vast majority of the driving. That's going to go to multiple manufacturers.
What I was in was full self-driving. I mean, I wasn't even in the.
Yeah. So what you were in is going to take a lot longer from a legislation standpoint, where we're going to have to see. Again, this is going to get complicated because are states comfortable with it? Is the federal government going across? If you want to go across state lines, states have to have agreements, and if states don't have agreements, then it becomes a federal issue. And I think that could take a lot longer than the technology could take.
It's also hard from a rules perspective, and I mean rules in the sense of like rules of the road. For example, I had to drive recently, and I was driving my car in New York City, and there was a car double parked in front of me, so I couldn't get around it. In order to get around it, I had to actually go over a double yellow line. There were no cars coming.
Right.
But what I did was not considered following the rules, in the sense of like, if a computer, like I don't know if a computer would actually do that. If I were in a self-driving car, would I have just sat there?
Would you have just sat there and been frustrated because it's an obvious solution that's not going to harm anybody, and it's the kind of thing you could do potentially. And now those kinds of things those kinds of conditions can be programmed in, but probably not for a long time. I'll give you another example. What about the example where people start to figure out where the vulnerabilities are in these vehicles? So if you want to see I'm making this up, but if you want to see the vehicle behave in maybe a strange way, come up very close to the back corner of it, or you have to figure out.
So sort of bad actors?
Yeah, not necessarily bad actors, but just people that try to figure out where the vulnerabilities are, so that they can get around them faster, potentially, or try to game the system in some way when you're a driver and you're driving sort of against, if you will, a full self-driving vehicle.
Looks like Alphabet's robotaxi service is going to launch in Miami in 2026. So
Look
maybe
at
that's
that.
go down there. Next time in Texas, go to Austin.
More and more of these cropping up.
I'm just waiting for New York.
That's right. How complicated is that? Like, will we ever see that? Like, I mean,
New York,
it seems very
you start
complicated.
getting out into some of those boroughs. You start getting downtown. Yeah. It starts to get a little bit complicated. But I would say I don't think New York is meaningfully more complicated. San Francisco can be pretty complicated as well.
Yeah, I was talking to a friend who works in tech, and he was saying New York's tough because there aren't very many legal places to pull over.
Right.
Whereas San Francisco, there are a lot of like driveways that people can pull into to get into one of these things. But yeah, it could be complicated here.
We'll see.
Crawford, always love it when you stop by. Thanks for sticking with
Great
us for some extra
seeing
time.
you both. Thanks so much for the time.
Crawford Del Pret, president at IDC. You can follow all of what Crawford is doing. Just check him out online over there at IDC. Hey, big thank you to Jess Metton over at the Bloomberg Equities team for sticking with us.
Always a
being
pleasure.
in for Carol this afternoon. The S&P 500 did close lower today by 0.2% as did the NASDAQ composite. The Dow down by just 0.5 percentage point. Taking a look at crypto, specifically Bitcoin, we are shy of $100,000, $99,000 per Bitcoin. A big thank you to Jess Metton for filling in. That does it for Bloomberg Business Week. I'm Tim Stanovic with Jess Metton. Bloomberg Balance of Power starts right now.